Good morning and welcome to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there by my good friend Connie Hill. She's out there in the chat helping to answer questions. She's a 20-plus year veteran of the financial markets, and she is glad to be here. Keep her busy this morning with those conversations. Be a part of that conversation and ask some questions and participate. If you're watching this in the recorded version, we're glad to have you here with us as well. Leave us a comment in the comment section. So we're going to get started here pretty quickly as we're getting up and running on the market this morning. A couple of things moving, not a lot moving, however, and we'll take a look at that as we get into this discussion. But a couple of quick housekeeping items as we get started this morning. Remember that everything we talk about is simply for illustrative and educational purposes only. It's not a recommendation or any kind of advice. Remember that futures and futures options trading involves substantial risk. These are leveraged products. They're not suitable for all investors. Make sure that you read and understand the risk disclosure statement for futures and options prior to trading and considering trading any futures products. Remember that as we talk about these ideas, futures margin is the amount of money you're required to deposit in your futures account to establish and maintain a futures position. We'll talk about futures margin along the way here. Also, we're going to talk today, perhaps, hopefully we'll get to it, some virtual currency derivatives, specifically, in this case, Bitcoin this morning, which is moving a little bit. But recognize that those involve unique and significant risks. Read the NFA and CFTC investor and customer advisories about the products. Recognize that virtual currencies are digital representation of value that function as a medium of exchange, but they are not legal tender. Also, remember that everything as we discuss it is theoretical. Technical analysis, fundamental analysis, probability analysis. All of those are theoretical means of evaluating the market. None of those are guarantees. So Schwab doesn't recommend the use of technical analysis as the sole means of doing investment research. And as we get into, again, this discussion, remember, we're going to be using the thinkorswim desktop software platform, specifically the paperMoney version of the platform. It is not a guarantee of future success out there in the real world. One last note, and this is a quick reminder, we talk about this every week, so this is a good reminder. Stop orders are not guaranteed in execution. When you put a stop order in on a futures product, that market order that is generated by a stop market order, whether it's a buy stop or a sell stop, it doesn't matter, that gets worked as an exchange designated limit order. That limit order is within a particular protection range or protection band. If price moves outside of that range, there is a possibility that that order will get rejected or not filled at all. So just be aware of that as we get into this discussion. I'm going to pop over here to the thinkorswim desktop software platform. We'll take a look at what's going on really quickly here in the broad market futures contracts here. This is /ES, up just a little bit this morning here, following a really big move over the weekend. And there went my crude oil contract. We'll talk about that in just a sec. We'll pop back in here and see what happened with that one. I had put that trade on to begin with, but the market's starting to move just a little bit higher here, up 0.12% this morning. The NASDAQ just kind of floating along, and it's toggling back and forth. It's kind of doing the stoplight effect here, toggling back and forth between red and green this morning, kind of underneath the 50-period simple moving average. So not a lot of upward momentum here, coming up off of a lower low on the RSI, and maybe running into a bit of short-term resistance on the NASDAQ. We saw some tech leadership at the end of last week and into the weekend, and now some tech leadership perhaps slowing down a little bit. We do have a number of tech earnings announcements coming up this week, and so that may be slowing down the NASDAQ a little bit in kind of a wait-and-see mode. The Russell 2000, the small caps, on the other hand, maybe the stronger of the three major market futures contracts here, /RTY. And if we were to look at the mini, it would be /M2K. But starting to see maybe a little bit of upward lift here this morning. One other chart that I want to look at really quickly here, I'm going to pop over to our single grid, and we'll use the futures chart as a means to do this. I'm going to bring in /VX, which is the VIX futures. So seeing what's going on with the VIX, we had a pretty elevated or relatively elevated VIX over the last couple of trading sessions up into that 22 handle. Strong downward move on the VIX, kind of those side-by-side candles. And now starting to see, again, here's the thing. You can't do a lot of technical analysis on the VIX itself because it doesn't necessarily behave in the same way in terms of support and resistance. But I think you can do a certain amount of technical analysis on /VX because this is a tradable instrument. The VIX is not. The VIX index itself is not a tradable instrument. It's simply a reflection of those prices. And theoretically, /VX should follow that pretty closely. Remember, this is a separate tradable instrument. It trades with its own demands of supply and demand. And so it's going to run into things like levels of support and resistance, whereas the VIX itself won't. Now, obviously, it's not going to get too far out of alignment, theoretically, with the VIX index, or that presents somewhat of an arbitrage relationship that could be created because there are VIX options on that VIX index. So there could theoretically be an arbitrage relationship between the VIX futures and the VIX options. And so you could see that kind of keep back in line with that, right? So that being the case, we kind of come and see what's going on here with the VIX. It's kind of hovering in a neutral zone here, right around this 18 handle, kind of mid 18 handle. It's in between two moving averages. It's in between the 50 and the 200 period moving averages here. And in this particular case. So I wanted to answer Ted's question here really quickly. The caution about stop orders being worked as limit orders applying in extremely fast-moving markets. It is applied when a stop order, regardless of the volatility of the market, and in my experience and my understanding, it is applied, that protection band is applied even in a quote-unquote tame market because of the possibility of market movement. So anytime you have a stop order or just a simple market order, moving that out into the exchange, so that becomes now a marketable order. Now that becomes a potential for becomes an exchange designated limit order. So that can happen whether it's a quick moving market or not. All right, let's come back over here. We've got the VIX. We got the major market index, or the movers here. Let's take a look at a couple of things. So I wanted to pop back over here really quickly to my futures grid. By the way, this futures grid, for those of you that have been with us for a while, you know that this futures grid is a two-part grid. It's got a longer-term chart on the left-hand side, a shorter-term chart on the right-hand side. So left-hand side is a one-year daily chart. Right-hand side is today's trading 5-minute candle chart. Left-hand side has the RSI on it. Right-hand side has the ADX as a strength gauge. And this is kind of the view that we'll look at as kind of our dashboard. I'm going to do this really quickly. We'll get this out of the way. I'm going to share this grid for you out in the chat. Remember, anytime we share a grid or anything else, it is for illustrative and educational purposes only, and it is not guaranteed as to time or accuracy. So let's put that out there. All right, boom, there we go. So a couple of movers that I wanted to look at was /MCL. This is one that I put a trade on earlier this morning. And this is kind of what I was afraid that was going to happen, but it is something that can potentially happen. And this is what I talk about when I talk about, this is one example of a relatively fast moving market. And we kind of see some oscillation here in /MCL. Now, this is the micro crude oil contract. So this is a tenth of the big contract. Initial margin is lower. So I'm going to go over here to the right-hand side. I'm going to maximize this grid on the right-hand side so that we can see it. This is a 5-day, or today's trading 5-minute chart. My expectation was this. that we were building this kind of ascending triangle here, and that momentum was falling off a little bit, but it was not dropping down below the 25 line on the ADX, which is kind of that line of demarcation in terms of, for Wells Wilder, strong trend versus weaker trend. Doesn't matter the direction. Bullish trend, bearish trend, it doesn't matter. The ADX is agnostic to that. It is simply trend strength. So still seeing a relatively strong trend when this was bouncing up off of this level here. So what I did is I built this trade around the idea that maybe we would see a breakout of that ascending triangle with the geopolitical risk that's going on. There's still some concern about supply constraints because of the issues going on in the Straits of Hormuz. So there was some potential upward pressure here in crude oil. So looking for this to break out. Now, this is a really good example, I think, of what can happen with a price pattern when it gets beyond the range of the price pattern. So quick technical analysis discussion here at the moment. Whenever you see an ascending triangle, this also applies to symmetrical triangles. This also applies to descending triangles. But anytime you have a triangle, that triangle eventually has an apex. And that apex is the point at which those two converging levels of support and resistance come together, whether it's a symmetrical triangle, descending triangle, ascending triangle, it doesn't matter. Even a falling wedge or a rising wedge, to a certain extent. Here in an ascending triangle, the expectation from a technical analysis perspective is that a breakout occurs somewhere between about 2/3 and 3/4 of the length down the triangle, i.e., I was looking for a breakout right here, okay? So when that price, as it starts to oscillate, let me just change my color here real quick so that we can see the difference. When that price starts to oscillate in between those levels of support and resistance, and it gets up here and it doesn't break out in that kind of area that it's expected to break out in, and it instead kind of starts to bounce and bury itself deeper towards the apex of that triangle, from a technical analysis perspective, the more likely it is to not move in the direction of the prevailing trend coming into the pattern, i.e., being a continuation pattern, but instead falling out the bottom of the pattern and this becoming a reversal pattern or a potential short-term reversal pattern. So back down perhaps to some of those levels of support. So this is kind of the, if you will, it's not, I mean, look, this is theoretical at best, number one, and it's just a matter of probability, but this is oftentimes what will happen. That's kind of the danger zone for a triangle breakout, is you get beyond that 3/4 of the way to the apex of the triangle, and it breaks out in the opposite direction. So do you plan a trade in the opposite direction? That becomes the question. So here's what we've got at the moment. Let me kill this real quick, kill that annotation. On this price move on /MCL, it ran up to this resistance level. And in fact, here's what happened. It triggered me in. So my buy stop, I had a buy stop order that was set at the 64.64 level, right there, kind of in that range. Now, I will say this. I was pretty tight on that buy stop order. I could have adjusted that a little bit and made it a little bit more of a threshold. And that's one of the reasons why we talk about using levels of support and resistance, not as bright lines on the chart, but as big, fat magic marker areas. So I could have given myself a little bit more of a threshold in putting that order in. I was kind of lazy. I'll be completely honest. So I put it in at 64.64, and it popped up, triggered the order, pulled back, and I was busy doing other things. I saw the entry, saw it go in, and then it bounced again, and it pulled back. So I was looking for that entry kind of right about where it should be, and in fact, it started to do that. Then it buried itself deep in the apex of the triangle, and you can see what happened is that it failed to back out the downside. This was my stop on the trade. So if we were to label this trade, the way that I put this order together, this was my entry. This was my target, which was the measurement distance of that ascending triangle. It was simply taking the base of that triangle, duplicating it up to the top side. And this was my stop right here. And that's how I put this trade together. So it caught me into the trade because I didn't allow for a little bit of flexibility there in terms of that volatility, and it entered the trade, and then it kicked me out of the trade as it moved in the last little bit below that level, just as we were coming on board here in the last 10 or 15 minutes or so, kicked me out of the trade. So at worst, I took a small loss in the trade. At best, this is a good illustration of what can happen with technical analysis, that, an ascending triangle doesn't always break in the direction that you think it's going to break. And if you don't allow that scenario to happen, if you don't allow for some flexibility in that range, there is the possibility. Now, Barbara Hicks has a great point, because I know the point she's asking here. How long before the triangle formation do I look to establish the prior trend? And if I were to zoom back out, here's what I was kind of looking at. If I were going back to my previous chart, is realistically, this is kind of the trend that I was looking at coming into that range. So this upward move in crude. Now, that's a longer term trend to be looking at the short term ascending triangles, because realistically, I don't know that this was in a downtrend, but it was, whoops, let me cancel that. Let me come back to this line tool right here. I was looking at this as maybe sideways to slightly up. So to be fair, and I would be 100% fair, Barb, and I think you caught it, that this wasn't the strongest of uptrends, but it wasn't an uptrend and it had some ADX strength behind it. So there is that. But, that's kind of the scenario. So to be fair, I'm not at all surprised that it made this move back down to the downside. Yeah, exactly. Looks sideways. Sideways to up, whatever. So I'm not at all surprised that this did this, that it moved the direction that it is moving. Now, that being said, we closed the trade down. That's why we have a stop order in place. Now, the question is, do we treat this as a potential reversal pattern back down to the downside and trade this bearishly down to this support level with some growing trend strength here? Or do we look for this to maybe break out of a larger range before we take a directional entry into the trade? And that is, honestly, this is the nature of short-term trading, is that you have to kind of make an assessment and make a discussion, right? So, or make a decision about which trade do you take. So we could, in this case, simply come back and let's create a trade. If this is our level of support, let's kind of draw that line in place here, right down here. And what we could then, in this case, do, if this becomes a potential reversal pattern, then you know what I'm going to do is I'm going to take this distance right here, and I'm going to duplicate that once again, and I'm going to grab one of those. Let's activate one of those. We'll grab it. We'll put it right down here. So I'm going to shrink this down now. Because I'm moving the chart up and down and adjusting that scale, it's also kind of flattening out that trend a little bit. Not that that's an excuse, but if I were to put this back on an auto scale, you can kind of see that maybe there was a little bit more bullishness there. So I'm not going to use that as an excuse. I'm going to just squish this back down again. And I'm going to say, fine, let's do the same thing. Let's keep our stop right there where it is. And let's do an entry here at 60. I'm going to call that 64, but you know what I'm going to do? I'm going to give it a little bit of range before it triggers. And then I'm going to make my target down here on the downside. Whoops. My target down here on the downside. Line tool, grab the line tool. We'll draw that target in about 63, 69. All right, so let's build this trade as a potential if this continues to move to the downside, so that we can take advantage of it, maybe get something out of this since it reversed against us. So I'm going to right click I'm going to sell custom with OCO bracket because we're going to go short here in this particular expected move, right? And I'm willing to take it off if it goes above 64.35. I want to get in on a sell stop below 64. So this is going to be now, we're going to make this a sell stop. And I'm going to say, all right, I want to get in if this goes below 63. I'm going to go 63.93. Will just be kind of different, not 63. So 63.93. So I'm giving it a few cents of flexibility in that line because I drew that line as a bright line on the chart, but it's not what it is. It doesn't exist as that. Now my buy limit, so if this goes back up, if this goes down, so we're going to set our target here. This is a limit order. It says buy it at 63.30. Let's go to 63.39. So buy this if it goes down to 63.39. We're going to make that good till canceled. We're going to leave that as a limit order because the limit order says buy it at this price or better. So if we've gone short the contract, we want to buy it when it gets back down to here. And then we want to sell or buy this on a buy stop if it goes back up above 64, we'll call it 64.35. 64.35. And that's going to be a buy stop. Remember, the buy stop order is going to work just like a sell stop order. It's going to be worked as an exchange driven limit order. So I'm going to click right there, make that a good till canceled. So here's the thing, PBG. Technical analysis is not just arts and crafts. It is drawing lines, but it is a matter of projecting what is likely to happen. It never cannot predict what's going to happen. But can give you some framework around which you can make decisions, and that's where we're using it. We've got a great series on getting started with technical analysis, but it is not a predictive science. It really isn't, and it shouldn't be. It is a decision-making framework, for sure. So we're going to put this order together. That's how we're going to structure the order. So now I'm going to take this. Let me grab my activation tool. We'll grab that. There's our target down here. Grab this one. That's now our entry right there. So we've adjusted the trade. Click on confirm and send. Read through the order. Make sure that that's what we want it to do. And we're going to put this in our futures group. And we're going to click on send. And we're going to set that order out there. So if this does break that level of support here, we're now going to trade this downward in a bearish direction down towards that target. All right, a couple of other things moving here really quickly. Let's pop back to our side-by-side view. And the other thing I wanted to look at here was, I want to look really quick so we don't miss it, because I know we missed it the last couple of times, MBT. This is Bitcoin. This is the micro Bitcoin future, in fact, and as a matter of fact. So if I click right here, I go to the futures grid, or the futures drop down, / MBT is the micro Bitcoin futures. Tick size is 5, tick value 50 cents. Your long or initial margin into this contract is 1870. So that, because of the recent volatility, that has gone up a little bit. Margins increase, margins decrease based on what the exchange sees as volatility-based risk. So let's pop in here really quickly and take a look at what's going on. Let's pop over to longer-term view first. And I think maybe what we're seeing here, again, break of a support. So I'm just going to draw lines that make sense here. We had kind of this break of support in this area where there was a bit of a gap. That kind of corresponds with this level of support over here. So that gap down to the downside. And if we zoom in a little bit here, we've had a couple of these little bear flag moves. And we're going to kind of draw those in. So downward move, a little bit of a rally back up, downward move, a little bit of a rally back up. So I think, just from that perspective and looking at that bear flag scenario here, let me put this back on the pointer, is this downward move in this particular case. Maybe continuing, we're starting to see that little bit of a bearish move off of this resistance level. So what I'm going to look at here in building this trade, and this is going to be theoretically a short-term trade, could potentially turn into a longer-term trade, but is that bounce down from this resistance and then the move below this level here. And I know here's the thing. I know that there are a lot of opinions when it comes to cryptocurrencies, Bitcoin, and so forth. And, the fact that we're seeing this push to the downside is met with the crypto bulls that are saying, well, this is manipulation or whatever it is. It doesn't matter. I mean, we could put our thumb over the symbol on the chart and simply trade the technicals here. So now I'm going to move over to the right-hand side here, and we're kind of seeing that same pattern playing itself out in terms of these bear flag type moves. So let me grab my line tool. Bearish downtrend. We had lower highs. We had a little bit of a rally above that level up into a resistance. So there's our resistance level here that it rallied up to. It's now broken down below that support. So is it giving us a bear flag type of move here? Yeah. So running up into this resistance level, and if it fails at this particular point, we may look at getting in. So this is where we get to things like, since we're talking about candles, individual candles here, these are 5-minute candles, a closing candle below the low of this high candle, right? And I'm going to zoom in here. So we're going to look for, if this is our high candle at the moment, we're going to look at this as a shorter term trade. So this is our high candle. And I'm going to look for a move below that low. So that's given us a high so far in this pullback and then rally. So I'm going to look for a move below this low of that high candle. Just like a hold, if we were flipping this over, this is going to be a kablode, close below the low of the high candle. So what I'm going to do is I'm going to give it a little bit. I'm going to draw a line right here, give it a little bit of a threshold for this to move to the downside. That's going to be my entry point into this potential downward trade. Now, this is a pretty good flagpole to the downside. So I'm going to take that flag distance from there to there, right click, duplicate it, and I'm going to take this back to the resistance level so that it attenuates it somewhat. And that's my target, 6,700. I like that in that it's a big round, or 67,000, excuse me. It's a big round number right there. 67,000. That tends to be a bit of a magnet. My stop is going to be, I'm going to go right back up to this resistance level here, about the 69,000 level as my stop. All right, so here's what we're going to look for. Right click. We'll make that entry 68. Zoom in a little bit more there. We can see it. 68414, right click. And this is going to be a sell custom with OCO bracket. 68414 is going to be our sell. Okay. And we're going to make that not a limit order because that would sell it right now. We're going to make that a sell stop. Now we're going to target, we squish this back down, 6,700 as our downside target. So buy it at that limit of 67,000. Make that good till canceled. And our exit, we said, was up here at 69. So we're going to say buy stop at 69. 1,000 right there. Okay, make that good till canceled. All right, so that's our short-term bear flag pattern. One cancels other trade here. Let's see. Oh, because I think I've got it in there as an increment. Let's see. Let's see. There we go. There we go. 415. There we go. Now click on confirm and send. We're going to put this in our futures group, and we'll see if this order will fill for us. If this moves below that level, send. We'll get that order in place. So you can see what's happening here. Again, this is just the type of trade, and we just got in because it's now triggered down below that level. So here's our flagpole. So if we were to just draw this out, there's our flagpole. We saw a little bit of a rally. We're looking at getting in here below the low of that high candle and trading this down an equal distance to that first portion of the flagpole. That's our target. Here's our stop. And that comes from the nature of a bear flag, just like a bull flag. When instruments trend, they tend to trade and trend in that series of highs and lows. And so that's what creates these bear flags. There's no guarantee that this isn't going to rally and go back up, which is why we put the stop there. If we didn't put the stop there and this rallied, then we've got some potential significant risk to the upside. Now, the stop's not going to guarantee that we're going to get out at that particular price, because remember, that's going to get worked as an exchange designated limit order. So that could gap around and not fill. And that candle's gaining some strength here. But that's okay. If this goes against us and stops in that other direction, that's fine too. That is why traders construct trades in the way that they do, so that in the eventuality that it goes against you, because you're going to have trades that will go against you. Not every trade is going to go in the direction that you go, that you expect it to go. And certainly not every technically informed trade is going to go in that direction. It's not an indict of technical analysis, and it doesn't disprove technical analysis. It suggests that we live and work in a dynamic, multivariate environment, and things are always changing. But we structure for and build the trade for an understanding of whatever risks that we can understand within the context of the trade. Can we control it? No. Once the trade's put on, the only control that we have is when we press the button to take it off. And even then, that is with some uncertainty. So risk management is all we have. There's no guarantee of what this is going to do. All right, off my soapbox for a minute. All right, let's pop back over here. Let's take a look. The other one that I want to look at really quick was /MES. So let's come back to our side-by-side /MES. This is the micro E-mini futures, and it has started to rally. We were talking about the fact that this was maybe giving us a little bit of rally momentum here at the moment. It's kind of breaking out, not really, kind of waffling around a little bit here. So maybe let's look at /M2K, the other one that we were starting to see. And that's actually not even giving us much move here either. Maybe a little bit of a bear flag, but it's kind of the trend strength is dropping a little bit. It's waffling around. Let's look at /M. Let's see. MNQ. Let's see what MNQ is doing here. And we're starting to get this little bit of, this is why I'm a little bit uncertain about this, just from the technical analysis, is that we've got a bit of an expansion pattern. And an expansion pattern from a technical analysis perspective is an interesting one to deal with, because it suggests that the opinions of buyers and sellers are growing further and further apart. That adds to volatility. So you're starting to see that volatility, the bigger range in which this is moving. That makes those breakouts a little bit less certain. Typically tends to be exhaustive to bulls, not necessarily so much to sellers. So if this breaks to the downside, that may be just an exhaustion of any buying pressure. So JV Texan asks the question, what does this ADX indicator on the right-hand side on the bottom show? Is that volatility? It's not volatility, it is trend strength. So it is a bit like the RSI, but it takes out directional bias. So it doesn't matter if the trend is moving up or the trend is moving down. It's at with how much strength that trend is moving. So typically the threshold on the ADX is the 25 line. So you can draw a 25 line here on the ADX, and that's kind of a demarcation of trend strength. Thanks, Connie. Yeah, Connie got that right there too. So that 25 level gives you a trend strength gauge. So you might use that as a threshold and say, hey, any trend that's below that isn't really a strong trend. Any trend that's above that is a relatively strong trend. All right. So I noticed there were a couple of comments. /SIL. Let's take a look at what's going on with silver here real quick. And silver's kind of consolidating down into this little tiny symmetrical triangle at the moment. /MGC micro gold is kind of doing the same thing. It's kind of narrowing itself down into this symmetrical triangle. I kind of like the symmetrical triangle there on silver a little bit better. SIL. And it's narrowing itself down. So notice what's gone on here with silver. We traded it down here around this range. It's now dropped. It's kind of rallied back up. It's kind of building, if you're looking at this from a technical perspective, maybe a right-hand shoulder on a weird kind of lumpy head and shoulders pattern. And this is maybe giving us a little bit of a bear flag. So let's look over on the right-hand side and kind of see what the trend is that's going into. And again, to Bonnie's point earlier and Barbara's point a couple of minutes ago, this is really kind of a sideways trend. In fact, if we were to put on here, say for instance, let's put on, because this is let's put on a simple moving average. This is a 5-minute chart, and there went our Bitcoin. So we got kicked back out, rallied back up against us because we were looking at going short. So we got stepped out. That's okay. All right, so what we're going to do is we're going to put on here that simple moving average. I'm going to change this to a 100 5-minute candle moving average. I'm going to make that width 5. Click on apply and OK. And we can kind of see what that trend is. That trend is kind of sideways going into this symmetrical triangle here. Pat Mullally and I used to call this a cobra pattern. And typically a cobra pattern occurs at the top of or the bottom of a downtrend, not really at the end of a sideways trend. But this is one of those, this is again one of those patterns where there isn't a lot of potential movement out of this. Very likely a move back to a level of resistance at the top of the chart, and or a move to a level of support down at the bottom of that triangle. So looking to trade this may be more effective once it breaks out of one of those two ranges. Okay. So zinc, appropriate name when we're talking about metals, MHG micro copper futures has been doing really not much either at this point. Yeah, indecision. Exactly, Helen. And copper's kind of doing the same thing. I was looking at copper earlier for this possibility because it was kind of building this basing pattern here. And you could look at this as maybe an inverted head and shoulders or an inverted basing type pattern, but it's pulled back and retreated from that level here, and the trend strength has fallen off. So the possibility here is a break to the upside. There's just not a lot moving at the moment in terms of the futures market that is giving us tradable patterns here in this particular case. But if we were to look at structuring a trade here, right click, duplicate that drawing, taking that up here to the upside, and putting a potential target on it. That would be the kind of breakout move here up to that 598 level. If we were to move over to the other side, where does that put us in terms of this move? I mean, just right up above that resistance level. So you could look at trading this on a longer term chart. but the entry may come on that breakout to the upside, looking for this for a reversal. Yeah. Yeah, and VIX is backed off a little bit too here as well. Yeah, Cobra is just my name for it. It's not an officially. I don't know what is the organizing body, Connie, that recognizes official price patterns? Is there an organizing body? Is there like an Olympic committee for price patterns? I don't know. All right, so what I would look at here in this particular case, just from the standpoint of these technicals, is that potential for a breakout trade. There's just not a strong trend here. That trend strength at this point, that ADX is falling below the 25 level. Would be looking at a possible break above this resistance, and then maybe a target up at that resistance level up here around the 598 mark or so. So that's how we might get to that point. You are on the committee, Connie. Okay, cool. All right. Well, that's cool. The one that writes the book. Yeah, they get to name the pattern. Okay, therefore, if we're writing a book, I'm not writing a book, but I get to name that pattern. I call it a Cobra pattern. So there you go. All right, I want to do this really quick. I appreciate that, Carol. I like that a lot. Let's look at that around the market here real quick. /NG, this is natural gas, and it is rallying a little bit in the short term. Maybe that's a bounce there. /MNG, kind of seeing that bounce, but trend strength is very weak in this particular case, and this is maybe an indication of why that ADX can be an important tool if this were to gain some trend strength. So one of the things that a trader could say in this particular case from an if this then that standpoint is if the ADX comes back up above 25 and this price breaks resistance, then enter that ascending triangle trade, right? Yeah, I agree. It can be fib zone. So, Dragon Ray, what made me decide to use ADX over RSI? Because in this short-term time frame, that's a really good question. In this short-term time frame, the RSI tends to lag somewhat because of the trending nature of the pattern. ADX is a little bit more simply a gauge of trend strength. But you notice that I go over here to the longer-term chart, and I have the RSI in place. And the RSI, because I'm looking at that longer-term chart, this is a one-year daily chart, that tends to be what I want to see is that trending nature of the RSI. I'm less concerned necessarily about the short-term trend strength and more concerned about the trend direction. But when I'm talking about these short-term trends, when we're looking at 5-minute bars, I want to see trend strength. I want to see oomph behind the movement. You could use CCI, Commodity Channel Index, as a trend strength gauge. It really is a lot like, and again, also created by Wells Wilder, a pressure gauge, if you will, just like the ADX. And how much momentum pressure is there behind whatever move is going on. But I like the dual nature of this in that it is trend strength, regardless of whether the instrument is going up or going down. All right, guys, let's do this. Let's kind of quickly come back here, see where we are in our futures group, and see what has gone on. And we got out of both of those, took a small loss in both of those trades, both /MBT and /MCL. Did what we expected it to do, sort of, and then went the other direction. So got us in and then took us down. And it could be the market's waiting for jobs report and for some kind of signal that's going to drive the market. All right, let's do this. Let's pop back over here and say, hey, if you want to learn a little bit more about this, there's some great resources. Come in here to the Trader Talks webcast page. Click on subscribe if you haven't done so already, and then type in your search term here. And I'm going to just do this, ADX. Type in ADX. And look, there's Cameron May talking about ADX. There's Connie Hill. Is the trend strong or weak? Using ADX to determine trend strength. Creating a mechanical trading system using DMI and ADX. There's Connie. Connie is the ADMX or the ADX guru here, it seems like. So follow these. Check out Connie's ADX webcast there. click on the like button, click on that subscribe button right here or on the bottom of your screen. Follow us on X at Ben Watson CS, at Connie Hill CS, and have a great day. We'll see you soon. I'm going to be teaching long options this afternoon, by the way, in place of Rachel Dashel, who is on sabbatical. So I'll catch you in that long options webcast. Thanks, Connie. Thanks to our great production staff, and thanks to our great reviewers, Nikki and Mindy. We'll see you soon. Take care, everybody. Bye-bye.